Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 773A, and today's date is September 23rd, 2015, and the title of this episode is Economic Growth Slows Further as the Economic Collapse Accelerates. Let's get right into the economic collapse financial news. Now, we're going to head out to Europe, the Eurozone, and they're continually convincing us that they have everything under control out there. But there was a recent survey which was conducted, and they're showing that the 19-country Eurozone is now showing signs of slowing. I have to object to that. I'm going to say that this whole thing has been collapsing, and it's not just beginning to show signs. We've been seeing the signs all along. Market said Wednesday its monthly Purchasing Manager Index, a broad gauge of business activity, fell to 53.9 points in September from 54.3 the previous month. Some economists are beginning to worry about the impact of German growth at this point. And of course, now they're blaming this on the Volkswagen crisis, where they kind of pre-programmed their software to make it look like their cars weren't spewing out deadly emissions into the atmosphere to make it look better than it really was. And then they use the copyright laws to protect anyone from looking at their software. And of course, they're caught. And they said, there's only about 482,000 cars that we have this problem with. But it turns out it's about 11 million diesel vehicles right now. And we can see at this point the company, and a lot of corporations do this. They do things in a way to get their sales up. And they knew this was going to be a major problem. We see GM does it with the ignition switch. They just push things out there. They don't care if it's a failure. Hopefully nobody notices. And eventually people do notice. But they're trying to blame all this on Volkswagen right now. This was coming for a long time. This has nothing to do with one company. I mean, will it be a black swan that will bring the entire system down? Most likely not. But they always like to point at one thing that's the problem. This is why we're having the problem. But as we've shown, this isn't the problem. The problem has been brewing since, I would say, 1913, but right now, we'll just go back to 2008 when they tried to fix everything with creating money and not really helping the everyday person or the economy. They just decided to help the central bank, the elite, the corporate powers. And all they did was make it worse. I mean, here in the United States, they're continually saying that, we're going to have this incredible retail season coming up this holiday season because the unemployment's down to 5.1%. And common sense would say, yes, this would all make sense if the unemployment continually comes down, more people are working, they're making money, and now the retail sales should be going up. But in the past, we haven't been seeing this. We've been seeing the retail sales continually sliding as time goes on. Because you have to remember, back in 2008 going forward to 2009, 10, 11, unemployment was much, much higher, and sales were higher. And as unemployment came down, sales came down, which makes no sense. But this point right now, for this time of the year, sales growth is as weak as it was in 2009, when we first entered the Great Recession. There's about 0.9% year-over-year growth. And Reuters reports this is the weakest U.S. holiday sales season for retailers since the recession. How could that be? We're at unemployment of 5.1. Real estate's improving. It's in a recovery. Retail's doing fine. GDP way up there. Something doesn't make sense. Consultancy firm Alex Partners expects sales growth to be about 2.8 to 3.4% during the November-December shopping period, compared with 4.4% in 2014. But based on analyzing consumer spending trends so far this year, guess what? It's not even going to hit that mark, not anywhere close. Actually, it's most likely going to be a complete disaster. And we can see right now that it is a complete disaster. I mean, if we look back in time to the previous years, we see sales in the year of 2010 around 4.3%. 2011, we see it very close to 4.9%. 2012, we see it very close to 3%. 2013, we see it at around 4.5%. 2014 was at 5.4%. This was during the September period. We're at 0.9% right now. What does that tell you? That tells you this year is not going to be good whatsoever. It's going to be absolutely horrific. Now, even the manufacturing is showing us things are not going well. U.S. manufacturing PMI printed a September preliminary 53.0. And of course, this is completely flatlined. And we're seeing other manufacturing data where it has declined dramatically. Factory prices dropped for the first time in 3 years. New orders and employment slowed. All of this right now is pointing to a complete collapse of the system. The Baltic Dry Index, which is the raw material which is used to create products, they're delivered to manufacturers. And we're seeing this holding steady about 917 right now. Usually it's around 1200 at this point. And it's been fluctuating up and down. And right now, today, it has turned down once again. And we know that real estate is not getting better anytime soon. I mean, the real estate market, has its ups and downs. Usually during the summer months is an up time. During the winter, it slows down a little bit. But this summer, we did not see this boost of real estate sales. Actually, we've seen a lot of declines during this summer. We've seen applications decline. And when the central bank pushed rates up just a little bit, like Volcker did in 1981, or during the S&L crisis in 1989, or the subprime bubble of 2007, guess what we saw? A complete crash of the real estate market. This is one of the reasons why the Fed is never going to ever push real estate interest rates up. If they do, this is a clear sign that they're getting ready to bring this entire economy down, because they know if they push this up, this whole thing comes to a complete stop. And right now, from the CEO of Chase, they are out there saying that the FHA requirements are down to a 520 FICO credit scores. And you only have to put 3.5% down. That's subprime lending. And a lot of other lenders will give you a mortgage at 0% and even lower FICO scores. They don't care. They're trying to get whoever they can in to take out these loans, to keep the home prices up, to keep the real estate market chugging along. Another telltale sign is the recent National Association of Realtors existing home sales data. The numbers are completely meaningless. What we see is that the market is starting to stall. It happened before. No buyers, no sellers. The profit model of the builders is counting on more sales at higher prices. A stalling market is not an option for builder profitability. New home sales are bound to follow existing home sales. They have been coming down, and eventually they're going to follow. And we've seen this before. This was back in 2008, where actually prior to that, 2007, where everything came to a screeching halt. Everything stalled. Everything started to drop. We're seeing this now. Houses are on the market longer and longer. People are bringing down their prices. Traffic is drying up. And as we move into the winter months, it is going to get worse. Fitch right now is warning There is a huge bubble in the commercial property market. And they're saying this is going to be a repeat of 2008, 2009. The only difference at this point is that the property bubble is double the size as it was in 2008. And this shows you that we're going to have even a bigger drop. And it is going to be absolutely horrific. I mean, this is just unbelievable. You see bubble after bubble after bubble. And as time goes on, it just gets worse. Mario Draghi is out there saying that, yeah, there could be some downside risks to look at, and they're starting to emerge right now. But it's too early to tell if this weakness will last. Well, believe me, it's going to last. It's actually going to get worse. And he says they have built-in flexibility, which is really print currency. That's pretty much it. And they realize by saying this that, yeah, they know something's going on. They know it's starting to come down, and they're ready to take action. And we can see just by today with the market fluctuating, the high-frequency traders, the plunge protection team, they're doing whatever they possibly can to keep this up. They're using the free money from the Fed. They're buying as much as they possibly can to keep this market up. Because remember, the stock market kind of acts as the last signal to let everyone know that we're in a crisis. Well, we've been in a crisis. And right now, it's getting worse. But as long as they keep the market up, they feel like everyone believes that everything is fine. Don't look at all the other stuff. Don't look at all the other information. We see Brazil's currency is plunging again. Turkey aims at boosting trade with Russia right now. They want to increase their trade from 30 billion to 100 billion. And we can see a lot of countries are starting to increase their trade with Russia. And it seems that a lot of these countries are battling between NATO, the United States, and the old system, and Russia, China, BRICS system, and they're caught in the middle. And they're just trying to basically balance everything to make sure that they come out ahead when this whole thing collapses. And we're seeing this from a lot of countries. And this is why they're making the bilateral trade agreements, taking on the yuan renminbi, and also keeping the dollar in reserves, and then slowly removing the dollar and keeping the other currency. We're seeing a lot of this because they know this system is coming down. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.